Now, the stock market is based on the shortest term patterns. We expected it to be in a range, and that range that we saw was 2613, 2692 for the S&P, and it's been in that range, though it's had an upward bias this week in the range. We thought that it would be a downward bias for the week, but hanging in the range that we expected. There's a slight shift going on that you're going to see when I put these up, and I'll be sending new charts out to our level 4 members that reflect this little shift that I see going on here in the market. There's we'll call it an elongation going on in the cycles. I'm going to show you the Russell first, because the Russell's been kind of dominant as far as these cycle patterns go, and that's a good place to start when you look at the index that is basically guiding us in these patterns. And you can see the huge clarity that we have here in what is a very busy chart here in the Russell. And what happened was that there is a slight shift or a little longer cycle that's occurring right in here. You can see this bottom right in here, and then as the cycle gets wider right in here, then it extends out a little more to the right. This is the sell zone, the area that we expect it to roll over, and here's that decline that we expect right over there. So what that does is it tells us that, well, we're likely to get a minor pullback in here in the stock market in the coming week, and then another rally before we get into what we think is the really risky period late April and in May. So we're looking for a pullback in the coming week. Now, if I extrapolate that out into the S&P 500, you can see in here that we have the shifted cycle in there also. So in other words, what we did was we expected that the ideal low would be right over here, and you see we got a low there, but then it shifted out over here to a lower low. So that kind of gives you, this is the pattern right in here that we're looking at. Again, a pullback likely in the next week, then one more rally, and then we think the collapse come out over here, as we talked about that period in the bond market where we think that the rally ends and it falls sharply. We think there's going to be a coincidence of interest rates moving up sharply and the stock market moving down sharply out in that late April, May period, and out even into June. For the coming week, we think there's going to be a pullback in here in the S&P 500. This area in the middle of this minor support is around 2616 to 2620. This is 2630 right over here. So we'll call it 2616 to 2630 is the area that we think it's going to pull back into before it then gets one more bounce. We'll call for a down week in the market and still stuck in this range area that we're talking about right over here, where we think it will remain choppy in here until it then gets a much bigger decline way out over there. So that's a look at the short-term view. If you want to see our intermediate analysis on all of these indexes and a much deeper look at it, make sure you watch Future Speak every single Wednesday, where we do all 23 of the futures and index ETFs, looking at 6 different sectors. So again, become a member. Don't forget, this is the last 3 days that we have of our special 30% discount in the cycle workshop. It's also a special that we're running now for level 3. So if you want to get that level 3 membership, get every single day those updates on the 80 best traded symbols and our rankings and trade setups, then send me an email, slim@askslim.com. I will send you that special link for $43 for a month.